Alright, so I've got two people asked me a question over the past few days, and I want to go ahead and answer them. And the first question is, and by the way, if you want to ask me, I guess the easiest way to ask me a question would be on the comments or on Al Brooks's his price action or website at brookspriceaction.com. You can search for me. My username's BCWolf, BCWOLFF. You can send me a private message if you want to do it that way, and I'll try and get back to you. But probably the easiest way would be to comment on this YouTube video, or try to reach out to me on Google Hangouts or Google Plus, whatever it's called. But anyways, this first question has to do with stop placement, and let me just read it. I'll briefly read it really fast. So this person says, or asked me, how do you prefer to manage scalps when using a wide stop? Do you always prefer to go for at least a 1 times initial risk, or do you simply convert your 1 times initial risk to actual risk? So let me rephrase that to make it easy to understand what he's asking me, and let's get an example. So let's start with over here. This day was the 19th, and at this point right here, there we go. Alright, I had to pause the video and kind of lost my place, but yeah, so this person's asking, how do I scalp when using a wide stop, and do I just simply keep my initial risk, or do I convert my initial risk to actual risk if it goes quickly my way? So yeah, let me just simply, it'd probably be easier if I show an example. So over here, on this day right here, so at this moment we have a gap up, and we traded up to some prior high. Just for illustration purposes, I'll draw it real quick. So we gapped up to this high, and that doesn't look quite right. One second. Well, maybe it is right. Okay. So, yeah, it's good enough. Okay, so as I said, here we are on this day, and we gapped up. We're failing to break above yesterday's high, and then we get a decent move down. So, it's a very tight channel. You may get a second leg down, but at this moment I'm thinking trading range. I'm thinking we may, it's possible we get a breakout to the downside, but from here it looks like we're going to stall and test back up to here at this moment. Well, and that's what we tried to do. We got to, break out of this tight channel, bull breakout, and then the second entry buy, micro double bottom, down, up, the double bottom from over here too. So it's a reasonable buy, but we start, we're having trouble going up. And if a bull bought above here, I said yesterday, I think I did, whenever this day was, on Monday, swing bulls will buy, and they'll probably get out below this bar. It's a double top lower high major trend reversal. Sometimes 40% you get a quick move down. So at this point right here, we just got a strong breakout, and the odds are we're going to get some sort of measured move. So maybe the first thing I think about is a measured move of this open to this close, or maybe from this high to this low. So if I were going to do anything on this close right here, I would sell to the stop up here. Okay, so I'm short right here, my stop's up here. So normally I would trade always in, and simply I would wait for disappointment and get out on disappointment. So I'd still be short, and then I'd say, okay, It's a wedge, parabolic wedge, 1, 2, 3. You know, we had a clear measuring gap here. We closed the gap here. 2 legs down, possibly second leg trap. It's a, you know, maybe this might be the midpoint of this leg, and this could be just second leg trap down. You know, we tried to bottom here, so in essence it's a double bottom, and then we got a bear breakout, so we may get a small second leg and reversal up. But I'm still thinking, you know, I'm thinking profit taking, we're going to close this gap. So I'd probably get out maybe above this low 1 if I was quick, but it never triggered. And I'd probably get out above here or maybe above here. That's what I would do. And however, you know, if I was strictly swing trading, I might just simply go for 4 points. You know, normally, I think a lot of times if I just want to get something and not trade always in, I'll just try and get some sort of measured move down, or maybe go for 4 points, or you know, something like that. So let's just say, okay, let's play it like this. This is one way to do it. Sell this close, stop up here. Probably 60% bet that we go down here before we get up here. So I'll put my target here, entry here, stop here. So I'm going for 1-to-1 initial risk. Well, at some point I'm going to say, well, gee, my actual risk is technically nothing. You know, more likely than not, I got filled probably over here, but it's hardly anything. So I could scalp out on this close if I wanted to. I could scalp out over here. You know, whenever your risk is too small, or not too small, but really, really small, I would say I'd try to hold for a bigger target. So that's kind of how I would do it. But, you know, to answer your question, you know, let's say I sold this close, and then this person asked, you know, let's say if you sell, he didn't say this example, but I'm going to give it an example. Let's say you sell this close, the market pulls back up to here, and let's just pretend this is your actual risk from this close up here is 1 point. You know, would you get out at a 1 point profit? Well, technically you probably could, because the probability is high enough. However, and it's a lot higher if I can sell this close, scale in, get out at break even, or with a point profit on all. But, you know, really, my thought is we're going to get a second leg down. We may get some sort of measured move. This may be a measuring gap. So to me, I would rather hold and, you know, not do that. I'd rather hold for a bigger target. That's because I like swing trading. So I hope this, you know, helps, and I hope that answers your question. You know, maybe over here, here's kind of a different example. So let's say you bought this close right here. And this is where I think it's important, you know, actual risk really plays in. Let's say you buy this close. We failed to break out above this high, so probably going to get a deep pullback. We may close this gap, may fall below, somewhere over here. So let's say you bought up here. Your actual risk was from this close, was basically from this close to down here. You needed to stop 1 tick below here. You know, most people don't pay attention to initial risk. They do, but it's far less important because everybody's initial risk is different. You know, you may have someone who buys here to stop well below my screen, betting, you know, that they'll buy more down here. But, you know, as you can see, you came close to 2 times. Now let's say you bought the follow through bar. So you said, okay, bull breakout, bull follow through by this close. Well, you would have made 2 times your risk. But for me personally, if I'm going to buy, put my stop down here, and let's say I did hold, I'm not getting out. I'm going to try and get out up here because there's no reason to get out until then. So I really try and push myself to, I try and not set targets. And, you know, for example, you know, I'm trying to trade I try and trade always in. You know, you buy above this bar, but then you get out below here because, well, let me go through always in. I traded the spider today, but it's basically the same with Emini. That's why you see all these lines, because I watch the Emini chart, and I only use the spider for, figuring out what the low of this bar is. So I think for always in traders, they always in long on the open. So they buy above. They probably get out below this bar. It's a failed breakout of yesterday's high. And you got to think trading range. So it makes more sense to sell and put your stop up here. And then we started testing down. This is one of those kind of trap trades. It goes one tick above the high of yesterday, one tick above this high, and traps traders out. So if a trader went short and then the price went down, they put their stop one tick above. I would never do that. I think if you're short anywhere in here, the stop's up here. Then we clearly get a breakout, probably always in long. Maybe need one more bar. At some point, clearly always in long, but we're getting all these tails. Do always in bulls get out above this bar? I think some would hold. I think it's reasonable to get out, but it never triggered. And now we're starting to go down. Now, so what about here? I think it's okay for always in long bulls, for always in bulls to get out, but if they do, they've got to get short again below a bear bar. And so where do they get short again? Well, they have to get probably below this bar, certainly on this close. Now, with that said, I could see the argument of not getting out here, betting, micro channel first selection fail, but if I didn't get out above here, I'd probably get out realistically above this bar, maybe above here, and then I'd try and get short below here on this close. And then, kind of the same as the other day, spike, breakout, so it's getting fairly climactic, maybe a parabolic wedge, one. Depends on how you look at it. I really see it as a second leg trap, possibly. So, for always in bears, maybe they get out above, but they certainly, I think, if they're quick, get out at this low. It's a low one short, consecutive sell climaxes, close to yesterday's close. And we're probably not going to have a gap that's this big. So certainly reasonable to get out. And we went sideways for this long over here after this breakout, so we'll probably do the same at a minimum. I could see getting out here. I could see certainly getting out above this bar. But I think always in bears have to get out above here. And I think certainly always in long bulls will get in. Here you have a low 2 short, low 1, low 2. It really doesn't matter. And I think it's an obviously bad bear flag, if you want to call it, that we're probably going to get a bull breakout of a bear flag, and this be the final flag, which it was. So, this is one of those trades where you have bulls who will buy this low, and they will put their stop. Oh yeah, and I have one more question I'll answer in just a minute. So they buy this low, and maybe they just stop all the way down here, and they wait for a bull bar, probably here, and they buy more. Well, they made money. So anyways, over here, probably becoming always in long here, So always in long, bulls buy above here, they buy this close, but when you get this, certainly I'm getting out below this second bear bar. It's getting very close to the Fed report. I probably wouldn't take any more always in swing trades. And then we pulled back. And then we got this bar. I don't know, this bar, this moved a lot really fast. So again, I would not trade the Fed bar. I think it's really dangerous. So I think, still always in long. Bulls either buy this close or this close, but big tails, so you have to be expecting a deep pullback. But strong enough probably for a second leg. Failed to break out of this high. So what do always in bulls do that were long up here? Do they get out below this bar, this block, or below the bear bar, or this bar right here? I think it's okay. Personally, I'd get out because there is the risk of an opening reversal and a collapse. We have, again, we had this gap over here, so with it being a Fed day, it's perfectly logical to get out, and you can see a lot of bulls give up. And then we got 3 bars down, but we stalled at the moving averages. We're stalling in this tight trading range area. We could not close strongly on its low. And then we get this kind of a doji bull bar. Well, that's kind of a difficult situation for swing traders. I think certainly always in long, always in bears get out, no question. And a lot of always in bulls will buy because when you get big reversals, and number one, traders are they're much more hesitant to fully commit. Second, strong enough breakout, probably a second leg, and the reality is, as long as we hold above this low, it's probably still always in long. So, you have to sorry about that. You have to think we may get a second leg up. Kind of a surprise breakout. I think we're clearly back to always in long. I think definitely by this bar. Stop down here. And then, the bears had a chance to get a bear bar closing on its low. They failed. And, so they're failing here. And then we got a strong breakout. And, yeah, so really quick, I had another question about, someone asked me about what is my take on so-called almost gaps? What are the criteria to differentiate between an almost gap and an overlapping gap leading to a channel or trading range? And then he says an almost gap, or this person says an almost gap is an overlap as well, but how big of an overlap you treat as the almost gap? Sorry, so let me just kind of read this question. Yeah, okay, so he's asking, basically gaps that lead to measuring gaps and gaps that close because traders are buying or they're fading the gaps. Well, yeah, so let me start with this example where we're at right here. So right here, it's kind of an almost, you can call it an almost gap. I'd simply call it a negative gap. I try to keep it really simple. It's either a gap or not a gap. And when it's not, it's either a gap or the gap closes or you get sort of negative gap. So, and in part, that has to do with how tight is the channel and how strong is the breakout. So, for instance, right here, we have a very small gap. It dipped one tick below and turned up. And it was a doji close, and it was not a bear body. So it increases the probability that we may get a measured move up. Now, maybe 50-50, but still, always in long, bulls probably will not get out below this bar. And you can see it led to a measuring gap. So we had a few of those the other day, and sorry. So by the way, always in bulls, they probably get long, get up here, and they got to get out below bear bar, probably below here. Late in the day, I just exit. You'd make a very decent amount of profit, so it's reasonable to get out. Yeah. So okay, what are gaps? Let's start with that question. A gap is a breakout, and you can see a tight channel, and let's take a look at the 15-minute chart. Here, it's a clear measuring gap. So although in here we're saying, okay, there's overlap, but you have to recognize how tight the channel is. The tighter the channel, the more likely it's to break out on a higher time frame because it's more difficult for the other side to make money. Think about it. A breakout, it's clearly one-sided. Trading range, both sides make money. So when you see this, that's all gaps are kind of telling you. And I try to think of it almost as, I don't want to use the word, but kind of stupidly, and not question it too much. For example, okay, we think about it this way, yes, we say all the time, there's a gap here, so we may get a measuring gap from maybe this low to this low, up to here. Well, yeah, that's good and all. And we can say, I try to keep it simple. I think it's due to bulls getting a breakout, bears selling this high, selling higher, and not being able to get out. So what do? They get trapped, and they have to buy back their shorts on this bar. Same thing happens here. Bears sell, they try to sell below bear bar, and they don't get out with a profit. And the only ones that make money are the smarter ones who sell this high, sell more below here, exit at break even. And you can see when they got this disappointment, they tried to do that on this bar and they failed and they went back up. So a gap's just a sign of strength. I try and think of it as, is this a, I would love to talk a long time about this question, but it's late and it's kind of try and ask, sometime, if you can, try and ask specific questions at times. And I know this particular question about gaps and almost gaps or negative gaps, it's more of a concept type question, which is fine. But if you have any sort of example that you're thinking about, try and put it in the question itself. That makes it a lot easier. So, let me just kind of look at the days real quick. So let me just look at the question. Okay, so what is your take on almost gaps? Okay, yeah. So what this person's asking is, what's the difference between how do you differentiate a negative gap, which is what I call it, Al calls it that too, and a gap that closes and fails? Okay. Well, a negative gap is just a gap that just barely closes, kind of like this. It goes up, turns down. And one way I think about it is, it doesn't, I try and put myself in the other side's shoes, so to speak. So for example, right here, let's say I start with this. Okay, let's just say I sold this high during this bar. Well, if I sold this high at over here, I got in at 46.25. Price went down to 44.50. So I could have only made a 1 point scalp. The bars are big, so maybe 2 points is the minimum. So I might be trapped by this close. And you can see if I tried to sell this high and I did not take 1 point, what do I do when this bar closes? Look at this low. It did not get back to this high. So if I'm short and I did not get out before price came back to my entry over here, I'm trapped. And I'm going to probably have to buy back my position because I'm scalping and I'm not trying to build a heavy position and just keep scaling it higher. So it's things like that. And the more you look at it, the more you start to realize it. Let's say over here, okay, I sell this high and it's 44.75 and I sell maybe 2 points higher. So 44.75, that'd be 46.75. Okay. I get filled at 46.75. And maybe I scalp out. So yes, I made money. But you've also got to think about it in terms of, okay, there's a couple things. Number one, looking at how easy both sides are making money. Over here, bears made money on a stop. Are bears making money on stops here? No. Okay, so we've got to break out probably a second leg up. Second, breakouts. Why do breakouts happen? Breakouts, one obvious type of breakout is a breakout of the flag. And, for instance here, bear breakout, sideways, so probably bear flag, we've got the bear breakout. Here, another bear flag, we've got the bull breakout. Here, a bull flag, got a bull breakout. Here, arguably a bull flag, it's a pullback and a bull trend. or a bull move and bull breakout, and we got a breakout above. So, but at the same time, if we go back to here, it really was kind of confusing. Maybe this is a bear flag, and we'll get the bear breakout and a second leg down. So 2 legs down. Maybe we'll test down to here. So, you have to think about the opposite. You can find a clear example of that is you get this bear breakout. At what point is this bear flag, if you will, not a bear flag, but it's a bull breakout of a bear flag? Over here, bull channel, bear flag. Well, we got a bull breakout of this bear flag, and we tested up, and no surprise, that's where price took us. So, here, trading ranges have breakouts. Trading ranges are basically flags that are just too confusing to really call it a flag. A flag is just a pullback, if you think about it. So you're going to have trapped traders. You're going to have committed bears who, at some point they give up. So with gaps, I think for one, it has to do with context. Is it a surprise that this so-called gap happened? And if it is, then it's probably going to lead to a second leg. And so how do you decide that it's now going to start a channel? Well, how easy is it to make money selling? The reason this is basically a small pullback trend day right here, and the reason I say that is it's hard to make money selling. If I sell this high and I don't sell up here, I get trapped. If I sell this high and I don't sell up here, I get trapped. If I go to a 15-minute chart or even just a 10-minute chart, how hard is? Look at this. Very, very tight. Compare that to okay, here's kind of an example too. So we're getting arguably a bull trend, getting a bull flag, and we may get a bull breakout of the bull flag and a measure move down. Well, we got the bear breakout, we got the measure move down. You'll have bulls who will buy this low and maybe they buy more above a bull bar here or maybe above here. Well, so let's say we did that. We buy this low, we buy more above here, or maybe we buy this low and we buy more, because I think this low is more logical. Oh, actually, let's just say we bought that low. Keep it real simple. We buy more above a bull bar here. We got trapped. Bulls bought this low. They bought more above here. And all they wanted to do was get out of break even, which led to more down. And, over here, look over here. This channel's fairly tight. We have a gap here. But we're getting decent bars for the bulls, so it looks like a leg in a trading range, and then eventually the gap closes. So, I don't know how clear I'm being, and I'll try and make another video about it another time, and maybe find some examples. But for this person, please, if you have a certain example, or don't hesitate to send it to me, and I'll try and answer it better. But I guess really in general, about your question about how do you decide if it's going to be at least a channel, I would say it just really depends. It really just depends on what it looks like. So let's say a channel is simply a second leg after a breakout, and you can get a breakout and then you can go sideways for 20 bars and then start a channel, or you can get trending trading ranges, which are basically broad channels. Here's arguably a trending trading range day, and the channel just got broader and broader and broader, and then eventually, you know, it just got more and more broad until we broke out to the upside. So, you know, maybe if I put it this way, always in short, I'd sell, put my stop up here or up here. You know, getting weak follow through. So, you know, maybe I'd get out above this bar, thinking, you know, maybe a second leg down, but fairly weak. Could be a second leg trap. So if I get out above here, you'd probably have to get short again. And then what do you do here? You know, we're getting consecutive bottoms, a lot of sideways. You know, I'd probably get out. But then up here, you know, it's 50% pullback around. Bears are failing to break above the moving averages, so probably get short again above here. Would I buy here? Probably not. I think it's, you know, fairly tight channel, getting a micro channel. And then we're starting to test down. You know, would I buy here? Again, probably not. The channel is fairly tight. It's hard to make money on stops. But this channel is very weak. It's not that strong. You know, it's very disappointing. So my thought is if we fall below here, we're probably going to close the gap. So, you know, if I was holding short, I'd see this. I'd probably get out above that bar. But it never triggered. And then we got this bar. I definitely got above this bar, but then you get the low one short. You know, I think if you're quick about it, you get out below that bar. And then you look probably to buy. And then we just kind of started channeling up. But you can see, even here, you know, it's confusing. Probably always in long. You know, maybe a 3 pushes down. So it really just depends, you know. We had a day a couple Fridays ago over here. You know, take a look at this day. Spike down. You know, when you know, the odds favor is sideways, pull back, and then maybe we'll get a channel down. A channel down, but we keep going sideways, and we just keep going sideways. You know, do bulls buy here? Well, maybe, but you know, this is a pretty strong move down. It's very tight, so it may just lead to a minor reversal. Here's a second interest short. Bulls definitely get out. Bears probably go short here, wide stop, and we just keep going down. You know, so at this point, I definitely would not be buying because the channel, it's pretty strong. You know, trends evolve from tight channels to broader channels, then to more trading ranges, and eventually the whole thing becomes trading range. And as you can see, we eventually formed an entire trading range over quite a few days, and then we kind of formed a triangle, and then we broke to the upside and tested these highs. So I hope I'm answering your question. You know, I hope I am. And for this person that asked this question, please message me back. You know, message me and let me know if that answered your question, or maybe we can talk about it and kind of figure it out. All right, thanks. Hope everyone has a great night and a great day tomorrow.